Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, a second day of steep losses coming in, but the good part is that we managed to, pair some of the losses that we saw around midday. We were below that 19,400 mark. So what we saw is a 90-point recovery coming in on the Nifty, and the sensex is down somewhere around 280 points or thereabouts. The important point to note is that the broader markets, they were gaining till about yesterday. They were providing some support, but that support has been lost given the fact that both Nifty mid and small cap indices have ended lower by about 1% or thereabouts. But FMCG and IT, these two pockets saw last hour buying, and both the indices in fact managed to end the day in the green. If you look at some of the other sectors, banks were among the top laggards. Realty was another pocket that saw some bit of a hammering in today's session. And if you look at some of the individual movers in trade, you had the likes of Axis Bank, SBI, NTPC, IndusInd Bank. These were some of the key losers. On the gaining front, you had Nestle, on hopes of stock split. This stock was among the top gainers today, up 3% or thereabouts. You had the likes of Eicher Motors, HDFC Bank, of course, after the kind of sell-off that it saw over the last couple of weeks. Today it was among the gainers on the back of strong Q2 update. And aside of that, HCL Tech, Infosys, TCS, all of these counters edged back into the green and were among the top gainers on the Nifty. But Yatin, let's talk about the broader end of the markets. There was a lot of pain in that segment of the market today.
Absolutely, and if you look at the mid-cap indices, they were down almost by nearly 1.5%. For the past few trading sessions, we were looking at mid-caps outperforming the markets, trying to contain losses or probably recover in the second half. But, this was not the case today. Today, we saw very deep cut coming in for the mid-cap indices. In fact, the mid-cap 100 index of the NSE saw, levels of 40,000. Small cap index also witnessing almost a 150 point kind of a cut, 1.5% lower. And probably that is the reason why the market's advance decline ratio also today became 1:3, which means one advance for every 3 declines, clearly indicating the rout in the market. Now, if you look at today's new listing also, which is UDS, there also we saw almost 5.5% kind of a cut to the issue price. So a discount listing is what we saw for that particular counter. In terms of losers, we had a host of NBFC stocks which were losing in trade, be it Indiabull Housing Finance, L&T Finance. We had M&M Finance, Chola Finance, all of these stocks witnessing deep cuts. Indiabull Housing Finance being the top loser, 7.5% lower. But also losing in trade was JSW Energy, Manappuram, Lodha. All of these stocks saw an average cut of nearly 5.5%. On the flip side, we had some gainers also in the market. Adani Wilmar up 6%, MapMind up 5%, Suzlon in such a market was up nearly 5%, and D-Mart after the quarterly update also saw gains of nearly 4%.
Right, focusing in on the positives, Yatin. So my stocks are the ones that were on the gaining side in the market today amid all the routes. So Nestle is the first one on my list. Of course, this was the top Nifty gainer today, up 3% or thereabouts. It will be considering a stock split on the 19th of October when it, hands in its quarterly earnings, as well as, it will also be considering a dividend. Of course, this will be, if approved, this will be the first ever stock split in the history of the company. Right now, the stock is somewhere around 20,000 odd rupees or thereabouts, right? So it's among the top 10 most costly stocks by price in the market. And if that stock split happens, it could the stock could become more liquid, and a lot more investors may have access to the stock. Aside of that, analysts expect that the Q2 numbers are likely to be strong, and it could be an outlier in the FMCG pack. In fact, analysts see stable volume as well as pricing growth for the company. Kotak Institutional in fact says that the company may have hiked prices of its products in the quarter gone by, especially in the baby food as well as coffee segments. And Kotak Institutional in fact models 11% and 15% YOY growth in domestic as well as export revenues. Remember, UBS recently has in fact downgraded the stock, citing expensive valuations, as it says that the stock has run up quite a bit this year. It's up 20% or thereabouts, and it sees very limited upside from here given the fact that the stock is trading at 66 times 1 year forward earnings. But despite this downgrade, UBS is pretty optimistic about the company's long-term growth trajectory. It believes that the long-term growth as revenue as well as volume growths are likely to be fairly strong. In fact, strong brand equity, pricing, as well as focus on product innovation is something that will be a growth driver for the company in rural markets as well. So, whatever said and done, the stock appears to be fairly expensive, but looks like the growth trajectory is in place, and perhaps there are some good times ahead for Nestle.
Absolutely, and the stock almost at the day's high, shut shop 3% higher. Now, apart from Nestle, oil marketing companies were also in focus. Today, the government also announced that the Ujjwala scheme, subsidy will be improved by nearly 300 rupees per cylinder for LPG usage for domestic, consumers. That news apart doesn't really move the needle for oil marketing companies, but Morgan Stanley believes that it is time to remain overweight on oil marketing companies. They expect that the fuel retailers in India should have a better valuation. There is a positive view based on the refining upcycle, and also most of these refiners have done a lot of capital expenditure. Moving ahead, obviously the focus area would be green hydrogen production, in which a whole host of oil marketing companies are expected to participate. Also, if you look at the outperformance with multiple catalysts ahead, Morgan Stanley believes it's time to remain overweight on oil marketing companies, especially the likes of BPCL and IOC. Now, if you look at BPCL, obviously it is hedged to a certain extent, given the fact that they also produce oil, crude oil, which has recently run up. More importantly, if you look at IOC, they have been the leaders in India for fuel retailing. Most importantly, they have a lot of expansion plans, especially in Rajasthan, to expand their refining capacity. So, on an overall basis, brokerages have started turning positive on oil marketing companies, given the cheap valuations and the upside to earnings moving ahead.
That's true, Yatin. I think, but one headwind that has emerged for oil marketing companies, of course, is the resurgence in crude prices. And ever since crude prices started climbing above the $90 per barrel mark, we've seen some bit of correction coming in. But once again, we've cooled off from 97 to 90. If we remain around these levels, or perhaps go down when it comes to crude prices, perhaps the outlook will be fairly upbeat for some of these OMCs. But let's talk about the second stock on my list. It's D-Mart. Of course, it gave its second quarter earnings update, and it's fairly strong given the fact that a 19% standalone revenue growth of on a YY basis is something that has been indicated by the company. Store additions have been pretty okay, 11% growth there, and 7% growth in revenue per store on a YY basis. In fact, the company has added 9 stores in the second quarter, and the total store count now stands at 336 or thereabouts. But Citi has a sell call on the stock, target price of 3,060 rupees per share. It says that there is no improvement in the throughput recovery as such yet, and it is yet to see the growth in revenue per square feet, because that has been impacted by the inferior product mix, and that continues to be a pain point according to Citi. And it says that the new store additions have happened, but it has happened in smaller cities. So at current valuations, Citi is fairly cautious on D-Mart, given risks around its earnings. But the bull case, as presented by Motilal Oswal, is the fact that there has in fact been a pickup in revenue per square feet, and it is fairly encouraging given the fact that the improved contribution from larger stores is quite visible, because the reducing gap between revenue per store and revenue per square feet indicates that larger stores have also started contributing to the revenues. And of course, there has been a slowdown in discretionary spending, and that has been hurting the non-food business for D-Mart. But with the onset of festive season, there could be higher demand, and which could aid the non-food business going forward. And Motilal Oswal is also expecting the company to add somewhere around 40 stores in the second half of FY24. Back in October 2022, the stock had 2022. Yeah, I'm right. The stock had hit a fresh high of 4,600 or thereabouts, and since then it has started coming off because of course, weak earnings. But now the bull case presented by Motilal Oswal shows that even the larger stores have started participating in revenue contribution, and the revenue per square feet is also improving, and the throughput productivity is also improving according to Motilal Oswal. And of course, the festive season demand will bode well for the company going forward. So I think Q2, Q3 could be some green shoots of recovery, and on that basis, looks like we can see some bit of recovery, and perhaps the stock could try and retest those 4,000 levels sometime soon.
Absolutely, and this is one stock which has been doing really well since the listing days. Obviously, there is one period of underperformance which most of these stocks face after stupendous rallies, and probably now after consolidation, Avenue Supermarts, and trying to regain those old record levels. With that, I think we have cleared the 3 stocks which are on our focus list. Yesterday we were speaking about gas stocks, and today we saw another rally coming in for MGL as well. So probably it's a good time to really watch this show and take out a few stocks which could probably brighten your portfolio.
Well, yeah, on that bright note, I think it's time to end the show here. But of course, tomorrow morning we'll see if the kind of recovery that we saw in the second half could pick up from where we leave, and perhaps we could see the Nifty, come back above that 19,500 level. It really depends on the global cues, and of course, we have the RBI policy also to watch out for on Friday. But with that, it's a goodbye from us. Thanks a lot for tuning in. Come back and join us again at 8:30 a.m. in the morning tomorrow, and of course stay tuned to Money Control for all your other news and updates.